Yikes, this market looking grim. If you want to see how we're playing this, what we're looking for, and if we have any chances of recovery, stick around as we dive right in. Yeah, what is up, gang? Tex here reporting for duty. Solo round tonight, ads. Enjoy your night, brother. I'm going to make this a quick one and try and get this wrapped up pronto, because there's not really a great deal to talk about, but we'll do a quick recap of what we did last week. We'll look at FBTC, the BTC dominance chart, of course, and where things stand in this current market. So let's dive into BTC USD. Last week we spoke about, even though it didn't technically satisfy everything we wanted to see within it, but it satisfied our descending, broadening wedge channel, which you can find over at unitytradinggroup.com. Go to the guides page and that'll tell you everything you need to know, along with a whole sleuth of everything else, take profit levels, what to expect from these patterns. And we said that although at that particular time we were sitting here and consolidating just below 58k, there was a number of things that didn't really satisfy to us any moves to the upside, especially back towards that sort of 64 to 65k zone. And if the move to the downside was likely, which we sort of said was probably the more likely outcome, this was a level of interest that we were looking for. Well, we got that, and then some as we blasted through that all the way down to 42k on the Bitstamp chart. I believe we even got to 28k on the Bybit charts. So some traders picked up some uber cheap BTC on that, and the whole market crashed. You know, we look at a lot of things happening in the regulated markets, the Omicron virus coming towards the end of the year as things start to slow down a little bit. Although traditionally Q4 has been quite good for BTC and crypto, this year it's certainly not being the case. Plan B's 100k chart, 100k BTC by the end of the year is nowhere to be seen. That's gone and well and truly off the cards at the moment. So we knew that down at this level there'd be a lot of liquidity, obviously, hence the reason why we had this big wick and lots of buy up and liquidity where it was tested. I believe we had something like $2.8 billion worth of liquidations over the course of that weekend period, which is absolutely savaged. A lot of over leveraged long positions, people playing with more money than they can afford to lose. The open interest was crazy, so it's all a bit of a perfect storm for these aggressive moves to the downside. So as we've said inside the Discord a number of times, don't really ever trust the first bounce, because more often than not, if we look to these downside moves, you know, double bottoms, double wicks, you know, moves where we don't always get exact double bottoms, but certainly we consolidate within a little bit of a range before any sort of recovery sort of move. So, you know, for that, it could be this sort of range at the moment. It could be even lower. I am not expecting upside moves at the moment, and even if we did, we've still got this very clearly descending structure at the moment. So for myself, this demand zone is toast, and I'm looking to downside moves. Would I be surprised if we went back down to around 40k or 38k? I absolutely would not be surprised by that at the moment. So if we go to my BTC chart here, where we look at our initial accumulation or reaccumulation distribution phase that we spoke about around that 64k level on the 16th of November, even though it satisfied a lot of the distribution schematic with our up phases in phase B, our signs of weakness, our automatic reactions, our secondary tests, a lot of that was satisfying the distribution schematic to a T. However, I was a little more aligned, thinking that we would probably bottom around 54k, where we I guess discover that we're in a more of an immediate reaccumulation phase. But as this whole Omicron and scaremongering and fearmongering and everything came out in the market and the reg market started to tank, it was starting to become a little bit less likely that we were in a reaccumulation phase. Are there whales accumulating at this point? Hell yeah, there would be. Are there other retailers and people like myself accumulating in this point? Hell yeah, because we were at 70k or almost 70k like a month ago, and we were praying for these prices. So if you're not at least looking or considering some points at this particular level, you know, that's on you. That's definitely on you. So here we are now. This demand zone's toast. We have well and truly satisfied the distribution schematic, in my opinion, now. So Dory, shout out to you, brother, if you are watching this. I know you're not joining us inside the Discord as much at the moment, but I take my hat off to you, sir. You were absolutely right, and I congratulate you for that. So I love the healthy disagreements we had inside the Discord, man. I can't wait till the next one. So as it stands at the moment, not looking very good. If we go to the 2-day charts, looking at this from, let's say, like an itchy standpoint, going between the two levels, we can definitely see that 46.8 zone is, I guess, the next cloud support from an itchy perspective. But as we head down towards these lower levels, we can see we've got a pretty gnarly C clamp here in our baseline, sitting around that 40.4 level. And again, a little bit of correlation, let's say at around 44K. So being that last 200 MA at that level. So yeah, between 44 and 40K seems like a pretty likely outcome for me at the moment, particularly as we start going towards the higher timeframes. There is nothing bullish about this at the moment. But overall, for the scheme of the market, hell, like it could be a hell of a lot worse. So, you know, let's just play it the way that it is. Right now is about capital preservation for me and for anyone that's inexperienced in this market. I'm playing the small time frames. I'm accumulating a few dollars here and there, having a little bit of fun. But for me, I am not looking to be too aggressively in positions. I would rather save the capital that I have, wait until we get to a point where we have confirmed a bottom or certainly a reaccumulation point, which I think will be certainly between these levels. There's a fair bit there, but undoubtedly we will get to a point where we range. Do I feel we're going to see all-time highs by the end of this year? Absolutely not. As I said, traditionally Q4 has been very good for BTC or for crypto as a whole, but as it stands at the moment, Plan B's $100,000 thing is well and truly gone. So I'd probably be looking more towards the end of January or February now for us to recover from this dip. I would not be surprised to see us consolidate or even indeed head lower throughout the course of December. This is not going to be a green December just yet for us. So let's see how things play out. At the moment, yeah, I would be short on this position. All right, let's have a look at ETH. Again, blasting through these demand zones. Like, that could not have been a more beautiful touch on our 3-4 demand zone. And I'll tell you why we spoke about this is because last week, I think it was not last Tuesday, the Tuesday before, we spoke about this fractal playing out on, let me just clear this. We spoke about this fractal playing out on ETH, and you can go back and watch that episode if you like, where I spoke about this pattern sort of repeating itself. And if we look at it from the highs here, it was around 33%. If we look at it from the highs here as well, we didn't quite get to 33%, but we did make up around 29% of the move. So in my opinion, that fractal is satisfied. And again, what do I expect on this? Again, I expect a double bottom. I think we'll probably look to retest these sorts of areas again. If we look on Gravy Train, certainly Gravy Train, my goodness. I just want to show you something real quick on Gravy Train on the 1 hour time frame. Man, if you don't if you don't have access to this right now, you are doing yourself a crazy disservice, because even though we identified Gravy Train was incredibly accurate on the smaller time frames when we developed it initially for scalping and developed it and continued to improve it based on beta testing and found that it worked on just about every asset, everything that you could imagine, this is where Gravy Train shines. I mean, come on. Look at this. This is absolutely ridiculous on the 1 hour time frames. This is where Gravy Train shines. So in the space of like 2 weeks, you could be up, what's that, 60-70% easily on some of these moves here if you're playing just the stop long, stop short positions. It is an absolutely baller indicator. I love this thing so much. So that's where we stand on ETH at the moment. This, again, satisfied, in my opinion, has played out pretty much as we expected it. I'm expecting more continued moves to the downside on ETH at this point. Let's look at 3.9 and then back down around towards that sort of 3.6 to 3.5 level on ETH is my overall levels that I'm having a little bit of a look at. Yep, aligns pretty well. All right, let's have a look at the BTC dominance chart. We spoke about this again a couple of weeks ago, where I think BTC was sitting pretty much about here at this particular point, maybe around here as we're looking at it. Yeah, that seems about right. That was last time I think I was on with ads. We're at this point, and I had mentioned that I think it was more likely, considering the overall sentiment in the market, where things are globally, that we would probably retest this demand zone. And obviously we saw a massive weakness in BTC over the course of the weekend. The dominance here is continuing to decline. Do I expect a recovery from this point? I think if we do recover from these points, I guess as you would expect to a degree after such a savage sell-off, I think any sorts of recoveries would be short-lived, and as I mentioned, we would just continue to range within that particular zone. I don't think we've got all-time highs in us just yet. I'm happy to be proven wrong. Really, the only exception to all of this at the moment was the FBTC chart. As we spoke about it, and this zone being the level to consider on FBTC. We said that it was likely that we would continue to push up there, just considering the sentiment, how things are pushing at the moment on FBTC. And really, during all of this, that was like probably the best hedge of the lot on this pair at the moment. So yeah, holding up really, really well. I'm still more confident on seeing, like, let's say a bit of a flippening, if you will, not like a dramatic one, but F probably being the quicker recovery from the market at the moment, followed along with your likes of like Sol, BNB. Luna has been crushing it at the moment as well. But you know, your LTCs, your XRPs of the world, I don't see those recovering quicker than your F pairs at the moment. That really is the one to be watching. And as I said, with capital preservation, you're in a prime spot to be able to catch that move or that recovery on F, and I can continue to see what sort of happens. So for me at the moment, that's where things stand for me. Capital preservation, really heavily in cash. Sitting pretty, waiting for more dips, waiting for some consolidation moves. I had put a little bit of money into a scalping account, purely based on the F charts at the moment on Gravy Train, so I'll be having a bit of fun with that. But again, please leave your comments, leave your thoughts, subscribe, come over to the Discord. I'd love to hear your thoughts on what's happening at the moment in your world and how you're trading this. But that's us. So thank you so much for joining me. I really appreciate you, and I'll see you in the next video. Take care.